Ladies and gentlemen, everybody, welcome back to the Boiler Room Trading Morning Stream. Gotta say, we're getting on a little bit early than normal, right? A little earlier than normal. That's because, as you guys can see, things are not how they typically look. I'm going to be moving, so the schedule is going to be a little bit different going forward the next couple weeks. I'll probably be on YouTube a little bit earlier each day. Still getting off around the same time, around 9 a.m., but we can expect that the time is going to change for when I get onto YouTube, so probably more around 8 to 8:15 in the morning. I'm going to try to hop on here, spend almost 45 minutes to an hour onto YouTube, and then we're going to jump on over into our private group. So that being said, no further ado. Let's see if the stream is working properly. Every once in a while it likes to get a little iffy. Okay, 3, 2, 1. Should be live. Maybe. No, doesn't look like it. Not sure what's going on now. There we go. Boom. All right, guys. So thank you once again for tuning in. We're going to get rocking and rolling here shortly. Okay. So the first thing we'll probably do is we're most likely just going to go through the most popular stocks that people are talking about right now. Since I got on a little bit earlier, I didn't have as much time to do, I guess you could say, as detailed analysis as I typically would do. But that's okay. So what we're going to do is jump through Discord's, we're going to jump and look at Discord's most popular stocks today. So right now, I guess you could say the top 10 most popular stocks are going to be DPW, Tesla, ANPC, KCAC, NVDA, SPY, Apple, NNVC, SHLO, and VXX, which is actually interesting that VXX is on there. Some of you guys are probably not so used to seeing VXX, and the reason being is because there's only one time you should really see things like that coming on the most popular stocks, and that's when the markets are going down. So that'll be interesting to talk about here this morning. Okay? Good morning. Good morning. Maybe my question will get read today. Estario, whatever your question is, go ahead and ask it, and I will make sure to get to it. I apologize. Sometimes I just kind of get rambling and going, and then I don't look at the chat. Yeah, so just ask away, and I'll make sure to get to your question today. Good morning, Mr. Leach. Thoughts on Apple, when to buy in? Guten Morgen. Are we at the start of a bear market? Probably, well, that's debatable. It's always, it's the $1 million question, all right? Let me put something into perspective for you. I have been trying to call a bear market since pretty much, I want to say 2018. What are we, almost 2000? Holy shit, we're almost in 2021. So yeah, since 18, I've been trying to call a bear market for, just call it 3 years. We've had our bear moments. We've had like basically 3 corrections. So it is kind of interesting because typically you don't get 3 monster corrections in like 3 years, right? And we did. So it is interesting. I've been trying to call a bear market since 2018. We've had 3 big corrections, which isn't something you typically see every single year. So I think it's safe to pose the argument that the markets are a bit torn, right? I mean, you look back 3 years. Let me pull up the chart, and then that way you can kind of follow along as I do this. And so let me get the screen going, and then we're going to pull up the SPY. And then this will probably tie in to your question a little bit better. And I would love to be able to give you a straight answer, be like, oh yeah, we're going to have a bear market, and it's just going to go down, right? I'd love to be able to tell you that, but I'm only 27 years old, and I can't predict the future, unfortunately. If I could, I probably still wouldn't be streaming here on YouTube to you guys. I'd probably be rich as somewhere, and you know what. So we're going to do we'll do like a 20-year chart here on the S&P 500, okay? So if you look at this chart, okay, and you date back to 2018, you have one kind of sort of correction, 2, 3. So really you've had 2 corrections, okay, and then you had like a half correction, okay? So you've had 3 arguable moments where the market was getting really shaky over the past 3 years. Okay, now if you date back and you look back, you're going to see that, some years you can go and not have too big of moves, but you can see that the corrections are getting bigger and bigger this time. And the reason that they're getting bigger and bigger is probably because the S&P 500 used to be priced at $67. Now we're trading up at, if you're looking at this ETF, you're trading up at like $358. So the range is getting bigger, right? The asset price is getting higher, which means pullbacks in ranges can be significantly larger. So each time we hear news about, the S&P 500 had its best week ever in 100 years, or it had its worst week ever in 100 years, it's down 15%. It's like, well, yeah, I mean, it's easier to drop 15% when, it's priced so freaking high, So to answer your question, are we going into a bear market? Again, in order to have a full-blown bear market where you could say we're trending below statistical average, which is like this white line on the chart, in order to do that, you really need some serious issues. What we had with the pandemic was enough, right? That was enough. We really just had one, but the stock market didn't totally reflect that of the economy simply because of the amount of stimulus we threw at it. So are we going to have a bear market? I couldn't tell you. But what I could tell you is that currently we have entered into more of a higher risk zone to be a long bias trader just starting, right? If that makes sense. To just now start long positions into the market, you would be buying the market at a premium. You would not be buying it on sale currently, all right? And so that's a decision for an individual to make, right? That's up to you. Do you want to go to Best Buy and buy top dollar for the TV, knowing you're buying top dollar for the TV, rather than just wait 2 months for the new one to come out and now you get that TV at a better price? That's all on an individual basis, so you'll have to decide. So I couldn't tell you. Just know you wouldn't even really be into you can't even fall into a monster bear market until you go through the low of 218. Right now we have 3 standard deviations at 243. So it's almost impossible for the markets to come straight down and go through that low at 218 right now. So just know it's almost impossible for the market to fall below $218 currently. All right, I'm going to make sure just to go through a couple questions here. We have more time than usual, so I'm going to try to take my time with some of these questions and then obviously still go through the stocks. Did we reach a bottom on Tesla? We will talk about that since Tesla is on the main stocks here today. Yeah, and like Lewis said, Lewis Crocker, right? It's a correction. It makes sense, right? What we're seeing makes complete sense in the market. Good morning. Is Webull good start for trading? That's really a double-sided question, and the best thing that I could say is if you are just starting out trading and you're debating between all these platforms to use, TD Ameritrade, Robinhood, Webull, there's many more I could go over. I don't think it's more or less about, I don't think you have to worry about necessarily what's the best platform. I think what you need to worry about is what you are comfortable with using, at least for the time being. Many platforms can look far more confusing and they can be a lot more scary. Yeah, a lot more scary to look at. So as you're starting out in this game, there's so much to learn. It's already stressful enough. I think the last thing you want to do is put yourself into a broker that's slightly more advanced and more tricky to use. Because the uphill learning curve, just in investing alone, setting aside trading, but just the learning curve alone, it's a steep one and it's a long one. And I think the last thing you want to do is put yourself into a more stressful, scary environment, which might be using a complex broker. So I would say, from personal opinion and experience, that Webull is a good starting point, not necessarily for best trading execution, not for best analytical tools. But if we could take a look at what platforms used to be to what some of them are now, I think you could learn much faster on something like Webull than you could something like Lightspeed or Interactive Brokers. And that's nothing against Lightspeed or Interactive Brokers. But again, if you're doing a comparison, how a trader is going to get from point A to point B comfortably, less stressful, I would say something like Webull desktop isn't a bad one. Okay. Webull is based in China. Webull is based in China? Yes, that is true. So that's really up to you. What you have to understand is we already use all of China's shit anyways. So that's really a debate for another day, because chances are if you look in your house, you have something from China in your house. So using a broker would just be the same thing as you, but just using an online-based product. The only thing people are worried about is that China is going to get your information because they're using a platform and they have to put in their social security number. That's pretty everybody's biggest concern. And maybe you have a right to be concerned, but show me how they intend to actually use your data, or if they're going to be using your data, and then we can have that debate. But as for right now, it's really just up in the air. But there is a lot of debate there of whether or not you should use Webull because it's a China-based platform, yada, yada, yada. And then everybody's like, oh, you should only use American. Okay, guys, let's just get a couple things straight. China, you could see, is bad. Well, guess what? China looks at America the same way a lot of people here look at China, okay? Our government is not perfect. China's government is not perfect, okay? So just because you're from the United States and we've been coddled to think that this bubble we live in here is great, it is. But believe me, we do some shiesty shit here too as governments, okay? So I would be equally as concerned as giving my information to China as I probably would my own government. So just keep that at the forefront of your mind. All right, so now that we've covered good amount, stream's kind of gone, we got some viewers in here. I think what we'll do is we're just going to start going down the list of the most popular stocks. Let me rerun this scan real quick to make sure nothing has changed, and then we're going to get going, okay? So I will probably miss a couple questions, a couple comments here because I'm going to be running through some stocks. So that's okay. All right, right now a lot of people are looking at DPW. I can tell you the reason people are looking at DPW is because it's just going straight up. Each day when we wake up in the market and we start to look at stocks, we start to analyze things, and maybe we run a most popular scan to figure out what the markets are looking at. Generally, the most talked about stock is going to typically be the cheapest stock that's running, right? And if you think to psychology-wise, it makes sense. It's cheap, it's affordable, and it's moving good, so the eye is attracted to it, okay? You could have the most attractive thing to look at, but then when you peel back the layers, you realize, holy shit, this thing is terrible, okay? It's kind of like dating a super hot guy or super hot girl. And then you start talking to them, and then you just want to blow your brains out because you realize they might just be the dumbest pile of bricks I've ever talked to. It's kind of like a stock. You can look at a stock, it could have all the volume in the world, it could look really good, and everybody could be talking about it. Come to find, it's still a shitbagger, okay? So that being said, just because you wake up in the morning and something's trading on high volume and it looks really good doesn't mean it's going to be the holy grail. It's just normal that traders are attracted to the opposite. It's just normal that humans are attracted to the opposite sex that looks really, it's just normal that traders are attracted to stocks with high volume that look good. Okay, it doesn't mean they're going to be good. So DPW right now is of the most popular, right? A lot of people are watching this and a lot of people are talking about it. So let's do our due diligence. Let's go back and let's start researching simple technical analysis, right? Let's just go back and take a look at this daily chart. So right now we're looking at the daily chart. Let's just go ahead and put a couple horizontal lines over top of our last resistance marks, okay? So we kind of got up to around this 490 before, maybe as high as 665. Now let's go look at the intraday chart and see how those line up, okay? So we're not anywhere near those, right? If you look at the chart now, those horizontal lines I just put on, they're nowhere to be found, okay? So that already tells me that we are nowhere near previous price action resistance. There's a big difference here. Resistance can come in the form of many things, okay? It could come in the form of previous price action, and it can come in the form of trend. Trend is most important first, then price action. So those horizontal lines go all the way up there, right? So we're at 230s and the 220s, and it can go all the way up to 5 to 7 before it touches previous price action resistance. All right, let's check out this 4-hour chart. All right, so what's the likelihood that DPW goes to $4 or $5? I would say it's not very good. I would say myself, it looks like DPW has already hit resistance today at the 234 price. So 234 is going to be the breakout level, and that is also, if we zoom in, that's that middle line. All right, you can see that's the middle trend line. So 234 for me is going to be the breakout spot for DPW, which obviously is the pre-market high. So that's the only thing that we will probably follow for today on DPW is maybe a move through 234, and then we could probably target maybe up to 268. If you get over 268, that would be great. But all we're seeing right now is maybe a move through 234 to 268. Okay. Good morning. Good morning. Good morning, Connor. How can I get the standard deviation indicator? Go to boilerroomtrading.com for the custom standard deviation indicator. It's $29. I'm not trying to sell you, but I kind of am trying to sell you. But if you do end up purchasing it, I'm telling you, it will dramatically help your trading. Or don't buy it for $29 and just go to the link in the description of the stream, and there should be a video. First video in the description will show you how to pretty much make it. That's it. It'll show you how to make it for free, but you will be missing a few things, but you'll pretty much have it for free. Okay. Or spend 29 bucks. Okay. All right. Now we're going to be taking a look at, we're going to be taking a look at Tesla. Okay. So let's go over, take a look at Tesla. All right, obviously everybody knows of Tesla, okay? They create clothing, apparel, sunglasses that the world has never seen before. No, just kidding. They actually create cars, and they create a bunch of other things. They put people in space. They want to go to Mars, and they want to build tunnels underground to shoot cars in. Pretty crazy ideas, all right? So first, let's talk about pretty much what's been going. Holy shit, down to 389. Fuck yeah, let's go, baby. Let's go. All right, so with that being said, Tesla is becoming ever more cheaper day by day. Day by day, it's becoming a better buy price. Right now, the statistical trend on the 4-hour chart, I could go on and on and on. So let's first start here. So you had the split the other day, like 4 days ago, I think it was, Friday, they did it on Monday, So about 4 days ago, we do the split on Tesla. Price shoots up over 500, everybody gets all excited, and now the prices are coming down. So there's a couple things that have happened in the time from the split till now. Most importantly, the Tesla market was hyped up. It still is hyped up, and that's okay. With all that hype, it drove the price higher into the split and higher after the split. All that extra buying has probably gotten shaken out by now. Number two, you had a common stock offering to raise money. I think off the top of my head, it was $5 billion right after a split. So that doesn't really look so good. So we sell down some more. And then on top of that, the market drops like 1,300 points or 1,200 points or something yesterday. So there's been a combination of many factors that are driving the price down of Tesla currently. Mind you, the market dropping 1,000 points, 1,200 points, do you think it's possible that that drop in the market was also contributed by the fact Tesla tanked and Apple tanked? Most of your major tech stocks were dropping on Tuesday and Wednesday. They have the largest market caps. So when those ones get hit, that's a shit ton of money that just left the market. That's a lot of market cap that was just lost, that's got shaved out of the market. The S&P 500 on Thursday reflected that, is what I think happened. So you have Tesla and Apple getting smoked Tuesday, Wednesday, just getting crushed, right? Their market caps get annihilated. So the S&P 500 come Thursday reflects that of those stocks losing off that market cap. So, yeah, all said and done, Tesla's getting rocked. From a technical side, it's debatable that we're going to bounce today. I don't actually like where we're at to take on risk, only because the level that we're on currently, it's always kind of an iffy one for me. So if I zoom in here, you guys see this dotted line in here? Okay, there's a dotted line in there at 379.57. And actually give me a second. I can do a couple things here that's going to make this stream much better that I don't typically do, because I can't because of the schedule. But now that things have changed, or I've changed them myself, I can actually use these. So this will be cool. Give me a second. Bam! Oh, almost, bud. Almost, bud. All right, so you see this dotted line in here? Yeah, look at those freaking arrows. Yeah, everyone's like, sweet. I've always wanted to use this on stream, but with the schedule, I was never able to. So you see all those yellow arrows in there that I'm pointing to that dotted line. That right there, I'm not going to go into a large explanation on it, but that is what I see as sort of a intermediate level we could hold. You can see vividly that last night Tesla came down directly to the dotted line, and then we bounced. That had that green candle, and then we came back down again and tested, and we're kind of bouncing it again. So it's debatable that Tesla actually holds over this $380 price today. All right. I want to double check one more thing, so give me a second. Yeah, so we snapped that, and then what's this, 360? Yeah, I mean, to be honest, as long as the market does not get smoked too much, I'm seeing anything from really the 380 down to 300 as sort of a decent level to take on some risk. If in the event the markets cross down below 300 and start going towards like 214, I would definitely take risk on down there, okay? So I'm liking where Tesla's going. I actually just transferred $10,000 yesterday to my IRA account. That way I can take a max deduction by the end of the fiscal year of 2020. So I might be putting some money into Tesla here on this drop. It was something I was considering doing. So anyways, as Tesla gets down more towards 300, I like it, okay? We're at 380. I think it would be a battle to see Tesla go all the way to 300 quickly. So I think within the next couple days, well, today's Friday, so Monday, you're probably going to see some bouncing taking place on Tesla somewhere here in the 350s to 380s. I just don't see it dropping all the way to 307. It could, and if it does, I'll buy it, all right? My camera broke. So salty. So salty. You know what? It's probably because we started using this. Let's try this. So camera's off, but let's try doing that. So we're gonna try and fix the camera, but yeah, it's definitely not working. So we're gonna do that, and then we're gonna add it back in. Let's see if Connor can pull a freaking miracle. Nope, camera is definitely not looking good. But look at that face. It's definitely beautiful. Definitely beautiful. Well, that's unfortunate. So, you know, is what it is. I guess we're going to roll without a camera today. We try to do too much on Wi-Fi, so that sucks. That's okay. I think it will, I think the webcam will go off here in a second. All right, so hopefully this all works still. That would suck if it didn't. Freaking noob. Idiot! All right, let's keep moving down the list here, though. All right, next thing we'll take a look at is Apple. And let me take a peek here at SPY. Okay. Ooh, so the SPY, yeah, the SPY is trying to hold right now over 344.71. Yeah, so my face will get off the screen here in just a second, but yeah, it's all good. All right, so now what we're gonna do is we'll take a look at Apple. So let's go take a peek at Apple. All right, so Apple, again, it's very similar to Tesla in the sense that obviously it's correcting. All right, as I was mentioning, if somehow Apple moves all the way down, say to here at like 106.61, say 106, I mean, we can definitely argue that that's going to be a strong buy point on the stock. So for those of you that have been looking at Tesla, looking at Apple, the stock price right now is 100 times more favorable to be long than it was just a couple days ago after the split, okay? If you were somebody that was looking to get long Apple, you were looking to get long Tesla because you're interested in, you know, they had these splits, you are far better off buying them now than you were the day after they split. So again, investor sentiment can change so quickly, but if you thought that these companies were good companies 5 days ago, you should be thinking they're good companies now. An even better buy price. All right, so we're going to continue moving forward. I'm not going to touch too much on Apple only because it's pretty much the same thing as Tesla. Everybody got hyped up. Next thing you know, bam, smoked. All right. Okay. All right. I don't have too much. I mean, we can keep running through some of these. I'm going to just kind of take a quick peek through. That way we're not wasting too much time on some of this. Yeah, like if you're looking at ANPC, this looks like a shitbagger. KCAC, this stock actually held up pretty well yesterday. I didn't really end up trading this too much. I think I took like one. Did I even take a trade on this, or was it? No, I don't even think I take a trade on this. So yeah, this stock we just ended up not even trading. It had a good day. It performed well. I just had a feeling that it was going to trade like this. You see how it was very back and forth, very grindy. This is really what I anticipated it would be like, so I just avoided trading the stock altogether. So if you're looking at KCAC, you're definitely not a momentum-based trader. This thing's like a choppy turd. So take it for what it is. I won't be focusing on KCAC. It's a very new stock. There's not much to go off of. And if you look at the daily chart, you just hit and went over 3 standard deviations. So there's a strong chance you might sell back down towards the $19 to $18 mark, okay? BIGC. Yeah, we can take a look at BIGC. BIGC down to 85. Oh, no. So yeah, BIGC is at a pretty good low risk buying point. I might even consider picking up some more shares here on this stock. So I bought some, I think I bought some on this dip day up in like 128. So I bought some there. And then I bought some down here on 108, kind of in this trend. And then I'll probably pick some up down there. So I pretty much just been buying this whole down move, right? As most people would buy on the up, I'm just buying on the down move. So yeah, I think BIGC is good, solely because of the market that it's involved in. I could see this having a lot of growth. If you look at their numbers, to me, it seems like they're expanding pretty quickly. It looks like a growth company. So all said and done, if you're looking at BIGC right now, it's pretty much gotten crushed. It's really not surprising. But right now, it's gotten down to a better buy point, right? If this is trend, right? If this is a true trend that we're seeing here, then we went from oversold to way overbought, back to sort of oversold, and we should be kind of onto a bounce. That would make sense. And even if it keeps going down, so what is what it is. Yeah, that's pretty much just it. But yeah, if you ask me, I think BIGC is looking a little bit better than obviously it was in terms of lower risk entry plays. Yes, now what we'll talk about is, say, something like VIX, VIX, we could look at VXX, whatever. So what we're going to do here is look at VIX. And the reason I say that is because of some of the most popular, at least this morning, was VXX. Okay, this was of one of the most popular. And you can see why. Why was it the most popular? Because if you look at yesterday, it had a phenomenal day. So traders and investors are normally attracted to what looks good and has had a good day. So you can see that VXX had a good day. But why did VXX have a good day? It's because the volatility index overall increased, okay? Now, this was something that we mentioned was probably going to happen, and it looks like the VIX popped up to 36. So the VIX did exactly what it should have done. It bounced from one standard deviation back to its statistical trend here at 36. You really need the markets to keep tanking in order to see the volatility index to keep going. So the next breakout level is at 36 right now on VIX. So unless you get over 36, you're not going to see another big ripping day there on the VIX. And the only way you're going to see the VIX over 36 is, again, if the market probably breaks yesterday's lows and at least attempts the 339 price as we had discussed. Oh, wait, no, I didn't discuss that with you. Did I? No, I didn't. I typically do both. Mimus, if you're talking about the trend lines on my chart, you can get them from boilerroomtrading.com, custom standard deviation. Connor seems like he got caught in FOBO during this off. Highly doubt that, but good one. Opinions on Google and Baba long term. Mimus, we already answered your questions. You don't draw them. They're a custom code. You can get them from boilerroomtrading.com. All right, so let's go back, take a look again at the VIX. This is the volatility index. This is essentially what goes up when the markets go down because volatility increases, right? If we go look at the S&P 500, it had a bad day yesterday. That is to explain sort of this uptick here in the volatility index, okay? AKBA, there's really no point talking about AKBA's loss, okay? This is a very common thing you will see. They're a therapeutics company. So when a therapeutics, so let me put it this way. This company had something in the pipeline with their therapeutics company that was supposed to be great. So everybody buys into the stock. And then the whole thing that they had going for them failed and the stock tanks. That's it. So literally they probably lost like FDA approval, or their, phase 3 trial fails. I don't know. But it's probably something around those lines. So will this come back? Yeah, maybe, but it's going to take a long time. So yeah, AKBA, it probably lost its phase 3 trial, or did not meet its primary endpoint in one of its studies, and then the stock tanks because that was probably the main thing that the company had going for it in its pipeline. And obviously, if that fails, then what else does it have going for it? Stock tanks. What's the importance of a 4-hour chart? The importance of a 4-hour chart is the same importance of any other chart. However you find it to be useful is what it's useful for, right? So a 1-minute chart is useful for looking at a stock chart on a 1-minute time frame. A 5-minute chart is useful for looking at stocks on a 5-minute time frame. A 180-day 4-hour chart is useful for looking at stocks because it's a 180-day 4-hour time frame. I get to see 180 past trading days up to current day, and then I could just trade off the trends around there. So the big difference between, really the only difference is longer and shorter time frames. Longer time frames hold more merit to longer time frame levels, right? In shorter time frames, help you guys see the intraday picture that could lead to a little pop right now, right? So I guess really to answer your question is just I use longer term time frames to find longer term trends. Should you hedge Apple and Tesla with SQQQ? No tip. Well, I mean, I guess you could if you want. It's not whether or not should you. It's do you think that the markets are going to continue going the way they're going, and then that's why you should hedge. Yes. If you want to alleviate some of the loss that you're acquiring, say on another security, then typically you would want another security that is doing the opposite of your other securities. And if you feel that SQQ is a way to achieve that, then who am I to be the one to tell you no? What I can say is that the volatility index did just pop up to its 4-hour trending resistance. So first thing I would actually do, first thing I would do is look at SPY here. I made a video last night that I did not yet get the post, and I don't think I will end up posting it. So if we look at the 4-hour chart here on the S&P 500, and let me pull some of this down that we don't need. If you look at the 4-hour time frame here on the S&P 500, it's bouncing off that 4-hour trend, right? It's holding the 4-hour trend. So I don't see us having a big down day unless the markets come back down below that 4-hour trend. And then you see this red line down here at 339. That red line is our daily chart trend right there. So I could totally see a day where the markets actually fake out and they drop down a little bit more towards 339 and then they bounce. So that's actually what I was thinking was going to happen. I thought that this market was actually going to shake down one more time to towards 339 and then we'd actually bounce. That's kind of what I was thinking was going to happen. So we'll see, all said and done. But yeah, that's it. I mean, that's pretty much it. I think the markets can drop down to about 339, and then they actually do a dip by bounce. Yes, we will take a look at Zoom, right? So if any of you guys remember Connor's streams, we just mentioned that Zoom would probably sell off. Actually, this could be a good bounce day for Zoom. I don't know for sure. I'm still looking, but it's debatable. But yeah, Zoom is one that you should follow the next couple days for a bounce because it's dropped so much that Just a simple bounce could be 20, 30, 40 points, you know. So I would keep an eye on Zoom over the next couple days for a bounce, but you can see that it's had a really big sell-off. Now, this is something that we did, in fact, mention to the market, right? If you think about Zoom and you think about their business, I mean, really, this earnings was fantastic, but they pretty much got handed this market on a silver platter. I mean, the pandemic forced everybody inside. It forced people to work from home. In doing so, they would have to seek out some sort of online service that they would be able to use to communicate, with family members, friends, coworkers. There is almost no better situation for a company like Zoom to have a pandemic. So I myself could very well be wrong, but my anticipation was it really can't get much better for Zoom currently, okay? It really can't. I mean, it could in the future, but when I say the future, the only way I see Zoom being used more than it got used just during this pandemic would be a long way down the road if we see a significant shift to online working. Now, if you look at the movies that are produced every day in your life, that's the future you will have. It's the future your kids will have. I know that sounds weird, but it's manifestation, okay? Ideally, whatever you put out into the world, enough will probably come back tenfold, okay? So for the longest time, Hollywood and just movies, I like to use movies as a way to predict the future because what is going into the movies is the imagination that is in somebody's head. What is in somebody's head can be created in real life. So what we're making in movies is usually just what has not been able to be made in real life yet, okay? And if you look at a lot of the movies, you'll see that a lot of the tech is very futuristic. You might even see flying cars. So those are all the ideas that have been brought to life, but not yet created. So if in the event you see movies that might shift to more of like an online-based world, which I totally think they will, then yes, something like Zoom communication long term down the road could be very successful. But right now, I think they got a short glimpse of what their future could be if in the event everybody's forced inside and everybody uses an online workforce. So the pandemic, I think, kickstarted what could be for Zoom. But for now, I do see it hard to sustain that sort of growth when you don't have a reason to be growing that fast anymore. So that's the way I look at Zoom. I like Zoom. We use Zoom every day. It's nothing against Zoom. But the pandemic really helped them out. And unless you have pandemic numbers going forward, you would expect that the user base should drop off, okay, going forward. Right now, we use TD Ameritrade execution. All right, ladies and gentlemen, sorry the camera stopped working today. That was unfortunate. It's probably because I was trying to run too many programs all at once on this little computer while streaming over Wi-Fi. But hey, we're probably going to be rocking and rolling with a stream like this for a couple weeks. As I mentioned, I'm going to be doing a lot of moving and then a lot of traveling over the next month or so. So things might be a little bit different here at BRT. But I do appreciate you guys tuning in. Make sure to hit the thumbs up button before you head out. And we will see you guys tomorrow morning for the next stream. Everybody, take care. Have a great rest of your day. And I will see you guys tomorrow morning.